Trading the smaller time frames is more complicated than trading the larger time frames. However, it is still possible. In this video, we are going to be scalping the 5-minute time frame. I'm going to show you how to analyze your 5-minute time frame because this is the time frame that we are going to be trading from. So scalping on the 5-minute time frame, you don't necessarily need to do any top-down analysis. I mean, from my own personal preference, I don't, because I feel like scalping, top-down analysis is mainly for day trading, swing trading, and short-term trading. For scalpers, really, like you just need to work with one time frame, bro. Like that's it. If you're going any further, it should be like 15 minutes maximum. But I'm good with the 5 minutes. I started with rest. You work with current price because the 5 minutes is just too small. If you go and do analysis on the 4 hour, it's going to show you an overall picture. And you're working with very short period of time on the 5-minute time frame. Okay, you're in and out of the market quick. So you don't need top-down analysis for that. You analyze the price, what you're looking at on your chart, and then you take your trades based off what is on your screen. So in this, what we see here is a piece of price action that we're going to analyze right now and see possible trades that we could have taken if we were trading this pair. And like looking at this naked chart, what levels are visible to your eyes? Like what can you see? What can you like imagine? Or just give you like 2 seconds to look at this chart and be like, okay, if I were trading this chart, this is the level I'll mark out. Which levels are visible? It's difficult to tell because this is the 5-minute time frame. You don't really see volume. It's just doing anyhow. But I'm going to show you a technique that you can use. It is called, I don't even know how to call it, but basically when the price move in an uptrend, this is what you see. And a downtrend, this is what you see, right? Okay, so if we can look for, touches along this up move here, we look for touches along this up move, touches like this. Then we do same inside this down move, this pullback here. We do the same thing here, okay? I'm just saying if. So if we can get this price action inside these levels like this, that means all we have to do is draw these channels. You know how channels work, right? You know that in an up channel, in a rising wedge, rising wedge breaks to the downside. Falling wedges break to the upside. You can go on Google and just type chart patterns or wedges and stuff. You're going to see all of those patterns. Screenshot it and keep in your phone. That's what you'll be using to scalp. So you'll be using these wedges like this because this market always has wedges, always has 2 taps, one way or the other. In an up move, you always have those taps. Up, down, up, down, up, down. Those taps are always there. The market always moves like this. It taps from one point to the other on its way up, and it does the same thing down in this wedge, in this flag pattern, always there. You feel me? So what we want to do now is see if we can identify these wedges in the market so we can trade them. Then study price and see if price is pull back or the price is continuing up or anything. You're just reading price, you're just reading the movement of price. So if you put your wedge and the price breaks down, you know that okay, at this level you're looking for what sells. If you put your wedge and it breaks up, you're looking for buys. That's it. Okay, let's go. So what I can see here, I can see a rising wedge like this. Trend lines. You're not using the trend lines to buy or sell. No. You're just monitoring price. You're using this trend line to measure the price, like to see if the price is in an up or down trend. You feel me? This is a very short-term time frame, meaning it's not going to trend for long. You just grab 1, 2 trades, you're out. That's what scalping is all about, right? So here we have it. We have a swing pullback, swing pullback, swing pullback. That's how it works. Okay. So now, this is what it is rising. This is a rising wedge pattern, and rising wedge patterns usually breaks to the downside. So what happened here is this wedge pattern broke to the downside. So what are you looking for now? Sales. From here now, which have you identified any obvious level that you can sell from? Yes, there's 2 levels here. You have impulsive push here, another push here. These 2 double tops here is a very good level to draw out in the market. You can draw it out. Looking for sales. They're looking for sales. Why? Because the wedge pattern has broken downward. It is a rising wedge and it has broken downwards. So you want to catch sales until it forms another wedge pattern and breaks one direction. You feel me? So from that illustration that I showed you down here, this is the up move, the down move, up move. You just keep doing that till it breaks one direction or the other. Okay, then you follow the trade using the direction. You don't have to go against the direction. So right here we are selling. Right here we are selling. So if you watch my last video, I made a video about entering trades, like how to enter trades like this. You don't really need to look for any confirmation. Here you just risk enter, because even if you wait for confirmation, that trade could still go against you and you still take a loss. A loss is a loss. If you to lose that trade, you will still lose it. Okay. So this is what I'm saying. You place a limit order right there for a sell. You grab your sell. You place another limit order if it's still pulling back up. I can see support here, but I'm not interested in buying here, because why? This is not a buying market. What I'm instead interested in seeing is that this level gets broken. But I can also see a trend line here. You can draw from top to top trend line. You need to mark two highs in the market for a trend line. So if you're scalping, you always you need to have trend lines on your chart all the time. So right here, we've identified two highs, one high, two high. So we can see that we can now mark this high to this lower high. Then now we have a trend line. From that trend line, we are not trading from that trend line. We are using that trend line to read price. So now when the price rejected here, you see that the price keeps bouncing here. So if you were having like a sell limit up here, you can sell from here to this down part, but you cannot buy here. You cannot buy because this is a selling market. You can only buy if this market does what? Breaks out of this trend line, then pulls back into your key level, then you can buy this market. Are you getting? It's very, very essential. You need to understand this thing. You can only buy this market if price breaks out of this trend line. Here, price did not. If price breaks out of this trend line, then buy from here. But however, if price doesn't break out of that trend line, you wait for a retest, you wait for a break of this low and a retest back into the trend line to sell this market. You feel me? Yes. You're not entering, you're entering because of this key level, not because of that trend line. You're just using that trend line for extra confirmations. You feel me? It enters back there, taps into your key zone, then you sell it. If you have to buy this market, this trend line must break, pull back into your key level, then you buy it. So that's all about this video. If you want to see more of this, then you should comment down below. If you're a scalper, let me hear you say scalp down below. Then I'll make more videos on scalping.